Hey, welcome to Spilling the Beans. I am Tim Bratz, and the world of cryptocurrency has gotten completely rocked over the past 12 months. I'm sitting down with a couple of guys, Corey and Dane, to talk a little bit about what they're seeing in the crypto world right now, what they're investing in, where they see opportunities, where they see the market going over the course of the next couple of years. And I'm personally very interested in what's going on that front and where those opportunities are, and see if there are opportunities, if any. So let's go sit down with these guys and figure out where are the opportunities in the crypto space. All right, boys, let's get going.
Boom.
Yeah. Corey, Dane, appreciate you guys being here, man. Welcome to Charleston, first of all. Is this your first time?
Second. I've been here before.
My first.
Nice,
Okay.
nice. So, staying at a beautiful, they just renovated the Mills House Hotel, so this is a great spot you guys picked. And no, I think it's cool that you guys are in town. And I think this is a very unique time for you guys to be here because nobody's talking about the excitement of crypto like they were 12 months ago.
Right.
And so there's a lot of different thoughts, there's a lot of different perspectives, there's a lot of different ideas surrounding cryptocurrency, crypto investing. And I know you guys come from the real estate space originally, so I'm excited to, I'm gonna challenge you on some things, right?
Absolutely.
I'm sure there's people having a lot of, not interested in crypto after what happened. But I think when there's blood on the streets, that's when you're supposed to be buying, right? And so I think there's a big upside, but I think there's a confidence piece that we got to get past. Me including. You know, I've put almost 7 figures into crypto in the past 12 months, and it's at 350 grand or something like that, 300 grand now or something like that. So I want to talk through this of what did I do wrong, what did I do right, what can people be doing right moving forward, and hit on all that stuff.
These are all legitimate questions.
Yeah, man, I appreciate that. Well, let's hear a little bit about your entrepreneurial journey. How did you guys become entrepreneurs? How did you get into real estate, and then how did that then transfer into the crypto space?
Sure. So I've been a real estate investor for about 7 years now. I was somebody that believed in the school system. I thought that getting a lot of education would give me the keys to the kingdom. So I went and I did way too much school. I got a master's degree, and it was a rude awakening, frankly, to finish that and have a hard time still getting a job, and certainly not getting paid what I thought that would lead me to, right?
Yep.
And so I'm there working, and I think a lot of people can, see themselves in the same position. I'm not making the money that I want. I'm kissing a lot of butts that I don't want to have to kiss. And so I'm just doing research. I want to find my way out. And so like anybody, right, podcasts, books, content, you find real estate. And it's funny because everybody says, well, real estate should be part of your portfolio when you retire to be wealthy, right? And I'm like, well, if that's where the money's at, then why wait till I'm retired? Like, let's just go do that now. And so long story short, I was laid off from my job. That's what pushed me into real estate. No credit, no cash.
2015 range?
Yep.
Okay.
Yep. Everybody says, like, go start in wholesaling. And I'm like, man, you go to enough events, and maybe this is just like my ego speaking, but you go to enough events and you see people saying how they're making all this money. And at least my experience, you see that enough and you see yourself in those people. I'm like, man, if that freaking guy can do this,
For sure.
I definitely could make a few bucks.
Yep.
And so I jumped in, and I think one of the pieces that's really important to understand, I'm sure you guys both had this same experience, but when you're getting started, you're listening to content, and somebody's like, oh, I sent out like 5 pieces of mail, and I made all this money, and I have 100 deals like in the pipeline, and it's been so easy. And I'm like, well, that sounds great. That was not my experience.
No.
Real estate has been so incredibly difficult to build to a 7-figure company, which I built. And so, but it's been a blessing. So for those of you that are listening to this and you're in the struggle and the grind, know that almost every one of us had to go through that to get there. Anybody that tells you otherwise is a liar.
Yeah.
100%.
So
Yeah,
that's my experience. I went from the corporate world to real estate kind of by force. I got pushed into it, and it's been a blessing, man. So.
When did the crypto bug kind of bite you?
Yeah, so I've been in crypto since 2017, and I got in like most people. Your first experience is buying the top when everybody's really excited.
So when everybody got excited in that 2017 run when Bitcoin got up to like $20,000,
20
right?
grand.
That's when everybody got excited. I bought in, I think, at 4,500 it like doubled. I took all my money off the table because I didn't know anything about it.
Right.
You know, and then it hits like 20, and then it drops back down for the next 4 years. You know, or 4 or 5 years. So that's when you guys got started, and you stayed in it throughout that time, learning about it, staying busy with it, or what?
I mean, so like most people, right, you get in at the top when you're excited and then price corrects, and most people just go away. Because if you're not making money, you're just not spending time and focus and energy there. And so that was pretty much me. And I lost interest until a couple of years ago, and then back in. And I treated it the exact same as real estate, where like you go to events and you see people making money and you're like, I could figure that out. Crypto's no different.
Yep.
See people make money and I'm like, I could freaking figure this out.
Yep.
And so I really dug in for the last couple of years. I was in a really fortunate position where my team runs all the real estate stuff, so I had the time to dig in and do the things I need to, do the research, and figure out how to do crypto the right way, because I'm not interested in these pump and dump scams or trying to chase a quick run, or frankly to trade it. And that's the hardest thing is, you know, you try to figure out how to do crypto, and you find two things generally. You find 95% of these people that tell you to go and trade crypto, the most volatile asset in the history of the world, and try to make some money. And almost everybody's sent off to the meat grinder where they lose everything that they're playing with. Or you find people that just tell you to buy whenever and all the time, and it's always a good time to buy, which is neither of those things are accurate. And the truth's always, you know, generally in the middle. So I spend my time where I'm focused on passive income, generating wealth, where I literally make money every single day in my sleep, and it takes, you know, compared to real estate, it takes almost no work.
Got it.
And
So I want to dive into that, and I want to dive into all of that after we hear Corey's story.
Yeah.
Yeah, man. I started in real estate a year later than Dane here. I was in 2016, and I got in by watching that show Flip or Flop. Tarek Al-Musa, I wanted to be the fix and flipper guy. I was a blackjack dealer before real estate. And it was a good job. I was making 6 figures a year because you make all your own tips, kind of like being a bartender.
Yeah.
And you got to go out and sell yourself every day, and it was a great job. Did it for a long time, but I was drifting through life, man. Real estate saved me in many ways. I was a heavy alcoholic, heavy drugs. You know, I loved cocaine. I was, you know, single, sleeping with many women. I had no life, drifting, just a party life, which is what most blackjack dealers do. It's
Really?
like, it's crazy. Yeah, like everyone's doing blow in the pits. It's absolutely insane.
Wow.
Yeah, this is common in the casino industry.
Wow.
And so,
dealing with all that money and all those chips and all those coins.
and they're all high and drunk.
Get out of here.
They're all high and drunk, man. I mean
there's a lot of math.
The OG guys have been around.
You
got to
be able to do math quick, so I guess that'll help.
It's so I did that. I was in that space for a long time, making great money. But a lot of time went by, and I wanted more. I wanted more to life, and I had money in the bank account, saved up, you know, just from doing that job. And I would watch that show. My girlfriend at the time, she was a part-time realtor, part-time blackjack dealer. She was like, "Why don't you flip a house so I can list it?" It seems easy enough. 20 minutes, you make $80,000. Why don't I flip a house so you can list it? I'm literally on my morning run the next day, and I see one of those bandit signs. Fix and flip, buy price, you know, $250, ARV $350. I stop my morning run, I buy that house. It takes me 6 months to make $8,000. First deal I did. Second deal, made 20 grand. Third deal, I lost all my money. I lost $250,000. I lost my 401k money, my previous flip money, and my life savings. And that's where I found wholesaling, because I wanted to learn how do wholesalers get deals, because the whole stick is like you can get deals for zero money, right?
Right.
That's part of the stick. Like, well, I wonder how they do it. And so I found Sean Terry and went down that rabbit hole and became a student of Sean, and built up a 7-figure wholesaling business. Did really well. I quit the blackjack job back in late 2017, early 2018. Quit that, went all in, and it's been a great journey. In that journey, I also discovered a strategy called Novations. I blew up the Novation Nation, which most of my people on social media know me by, and it's just been a great journey. But like Dane, to Dane's point, real estate has not been easy. It's been a grind. It's been just, there is no passive income. I've owned rentals, you know, mini rentals. I've done a lot of fix and flips, and I've owned the wholesale business, and it's a lot of problems. And it's been a great blessing in my life. I don't want to discourage anybody thinking about getting real estate, not do it. It's saved my life. But it's not. It was a means to an end. It's not something I want to do for the rest of my life. It is just a vehicle to get me to the next stage of my life, and I know that now from God. I'm a religious guy, so I know that's what's going on in my life. Crypto's the next phase of my life, and I got into crypto. I bought the top of 21. I came into crypto, and I have all this money making from real estate, and of course I have shiny object syndrome like most entrepreneurs do. And I'm chasing the dollar. I'm like, oh, Bitcoin's gonna go to 100 grand, and it's at $5,000, and I'm watching all these influencers.
Dude, you got rich. You made a great decision for about a week and a half, right? And then
it was. I literally came in and I threw like 200 grand at all these different altcoins because whatever the influencers were recommending, like Ram the Man and BitBoy and all these guys, and they're recommending. I'm just buying all these altcoins, and I'm getting wrecked the whole time though, and I'm their exit liquidity. I didn't realize that at the time. I'm their exit liquidity. I would buy on a green candle when they shield it, and then that green candle would pump that day, and I'd watch the next day it would drop 20%. It's like, man, these MFers are exiting on me, which I had to learn the hard way to do that. So I lost a lot of money in the beginning of my crypto journey, and it's the same way as my real estate journey. I lost a lot of money in my real estate journey, but I had to learn the hard way on why I lost money. I had to sit back. It's my fault I lost the money. It wasn't, the influencer's fault. It wasn't the contractor's fault I lost that money in real estate either. It was my fault for not doing my due diligence, for not, not really learning about the industry I'm trying to get into. That's the biggest mistake. People treat crypto as a casino to go and gamble at, and that's why they lose massive amounts of money. If they treated it like a true investment class, like real estate is, or any other, the stock market, if you treat it like that and you do your due diligence, you learn the market cycles, you can do really well in crypto, but you need to treat it like an asset class worthy of investing, not going in and playing the slot machine and just trading.
Right. But so there's been a lot, obviously, a lot of people invested a lot of money at the end of 2021, and then beginning of 22, everything drops by 50 to 70%, right? FTX goes and loses everybody's money on the exchange. There's talk about Crypto.com going out of business. There's
BlockFi, Voyager, Celsius.
Yeah, dude.
So many.
The one stable, even a stable coin, right? Got a rug pull. Right. And when all that confidence is lost, how do you still have confidence in an industry that has that much volatility and that much craziness going on?
Yeah, it's the same thing. Like, it's funny. So, in fact, I did an analogy on social media about a month ago. If you could go back to 2008, 9, 10, when real estate had crashed, how many people were sitting on the sidelines calling it a scam and asking if real estate was going to come back and do all these things? I mean, there was a lot of people asking those questions, and there was a lot of doubt and fear in the market, exactly the same as crypto. And if you look at the price charts, I mean, everything works in a cycle, right? Real estate generally goes up and to the right, followed by a crash, and then it does the same thing over and over and over again.
But real estate's also time-tested versus crypto.
Agreed.
Started, 2008, 9, something like that?
That's correct.
And so this is like the second cycle, right?
No, we're on the fourth.
Fourth? All right.
Yep.
So is there enough confidence
in,
still?
So that's what I want to point to, is crypto works in cycles the same way as real estate, but it goes faster. So crypto works in 4-year cycles. We're moving into our fourth. We're moving into our fourth cycle. And this is the 4-year cycle that people need to understand. If you just understood this alone, like, this is literally, here's $1 million tip. This is the main thing that you need to work off. 4-year cycle. The cycle starts with the Bitcoin halving, where simply all that means is that Bitcoin gets twice as hard to mine. Mm-hmm. When
did that happen last?
So that happened, what is that? 2020?
Yeah, the next projected Bitcoin halving is March in 2024.
Yep.
Got it.
That will be the next Bitcoin halving.
Yeah, so 2020, so 4 years previous. So Bitcoin halving, twice as hard to mine. Crypto goes berserk for about 1.5 years after the Bitcoin halving. And almost anything that's not a rug pull or a scam just goes nuts. Now, they don't all grow equally, so you need to make sure you do your own due diligence to find what you're most comfortable with, to find the best stuff.
Yep.
But 1.5 years of growth, generally speaking, we use Bitcoin as the market indicator. 1.5 years, market tops out. generally followed by a year of a crash, and prices get decimated. That's where we're at right now. Price tumbles, and usually Bitcoin and Ethereum fall about 85%, and the other stuff falls about 90 to 95.
Like clockwork, though.
Like clockwork. It gets annihilated, and then everybody's like, well, where's the confidence? What do we do? This happened 3 times before. It's not rocket science. And we've got a couple of years of sideways action up to the next Bitcoin halvening, and then we're off to the races again. If you just understood the cycle, you'd be able to make good decisions instead of buying the top like most people. Me included, I bought some stuff at the top. You'd be in a good spot.
Absolutely. And you can just do that with, if you only want to stick to the fundamentals, Bitcoin and Ethereum. And that's it. You don't want to go any further than that.
That's what I was going to ask.
You would be very safe just doing that and following the cycle that was Dane was talking about. You would create more wealth.
Why even go into other coins then if those two? Just because of
opportunity,
higher gains?
Opportunity, right?
Yeah, in fact, if you're familiar with they call it the technology S curve, right? And literally it looks like an S. So if you're buying early where things are less proven and less tested and it goes well, then you catch pretty much the whole S of the growth. If you wait till things are more proven, and that's where we're at with Ethereum and Bitcoin, more proven, you catch just the top of the S, and so the growth is limited. And in fact, I think if you look at this last run, I mean, Bitcoin did what? Like, I think it was
3 or 4. I can't remember what it was.
Yeah, it was only like a 3 or a 4x. Ethereum did double that but it also fell further, and so that's why it did more.
And Ethereum's a newer project than Bitcoin. Bitcoin's the big daddy. It has first mover advantage. That's why it's done so well, and it's why people treat it as you call it the blue chip in the asset class, because it is the big daddy. But like to his point, it's the top of its S curve. It's old tech. It's spaghetti code. It's only a matter of time.
Bitcoin or Ethereum or what?
This is Bitcoin we're talking about.
Yeah. How much 13-year-old tech do you use in your life today? Right. Almost none.
Yep.
Right, and that's what Bitcoin is.
Yeah.
And thank God for it.
You need a new iPhone every single year.
Yeah.
So and that's the question. Everybody looks at it as the standard, but is it going to be antiquated? Right? And when does it become antiquated where nobody's even using it anymore because there's no real tangible use to that or to Ethereum? Right? Like everybody's talking about Hex, which is on your shirt, being like the new Ethereum or like things being done on these new channels, right? And I don't know, are people? Is that going to happen? Does it not happen?
It's been happening.
Does Ethereum adjust and essentially go through these growth phases of its own, where it just kind of happens internally, or what?
It will. Absolutely, yeah.
And I mean, it's been happening. So the cool thing with Ethereum is you can actually build on top of the blockchain, and there's a million different applications.
Because everybody builds on top of the Ethereum network,
right?
Yeah,
But you can't build.
It has smart contract capability.
Right.
It has utility where Bitcoin didn't have that.
No.
It was used mainly as a store of value, where it was created for peer-to-peer cash, peer-to-peer transactions. They failed. They failed miserably at it, so it ended up defaulting to a store of value, digital gold, if you will.
Right.
And that's its only use case, really. Even countries have been buying into the narrative, though. It's a narrative, and all crypto is surrounded by a narrative. You need to have a good narrative and a good community. That makes good crypto. Bitcoin has it still. So it will continue to be the store of value, blue chip that we're seeing, even though it's spaghetti code, top of the S curve. Mm-hmm. But what me and him specialize really in is finding good projects that have good product market fit that are being built now in the middle of a bear market that will have the most upside potential in the next bull run. That's what you want to be focusing your energy on. And because bear markets, that's what they're bear markets are for building, bull markets are for selling. Ethereum was created in the bear market, and it was sold in the bull market.
Right.
So how do you find those coins? How do you find those opportunities?
Boy.
Are you reading through all these different white papers?
Well, here's
you need to.
There's a ton of different ways that you can do research. And it's funny, you get on social media and somebody is like, oh, here's my favorite 5 coins. They go boom, boom, boom.
That's not research.
And then they say do your own research. Well, what does doing your own research mean? Here's the 5 things that are important to me when I'm looking at me and Corey when we're looking for good projects. Once again, it can go infinitely deeper, but here's the 5 things. So the first is I want a public founder with a track record. If they don't have a track record, that doesn't necessarily mean I'm not interested. But that's what I want first and foremost, public founder with a track record and history there. The second is I want a cult-like community, think like early Apple, where they're about it. They live it. That project is a part of their identity, cult-like community. The third is really strong marketing. The marketing is typically done by the founder and the community, and you see that in form of social media content, and you see sponsorships, you see mail. I mean, all traditional marketing, you see that there. The fourth is I want good fundamentals. So long story short, that just means that the project is built to appreciate and go up over time. And a really easy way to be able to tell
isn't
that.
Every coin is built for that, right? Like that's the intent
Not
with every coin.
That's the intent often, but is it executed and done properly?
Yeah, that's the intent portrayed. It's a narrative
Right.
they sell you into. But you got to go a little bit deeper than the narrative to really dive into the utility of the coin is, the tokenomics of the coin. Does it follow the first rule of the first principles of crypto, which does it have admin keys? Is it trustless? You know, is it immutable? There's so many different things. Was there a VC phase where a lot of people were given these coins before even the launch so they could dump on your head? You know, there's all these things you really got to dive into to figure out if it's a good project.
Right. One of the easiest ways, and Corey nailed it, Corey does an excellent job on the deep stuff. For me, like I lose track if I don't keep it super simple. So Corey is the
About
deep
8
guy,
hours
which is great. For me, I want to look at the code because most people don't understand this. Almost all crypto projects are just copy and paste of other projects that have already been done. So literally, if there's a new project coming out, I can go and figure out, usually pretty easy from social media, what is it a copy of? And then I can go see how did that project do. If it did well, then there's a decent chance this one will do well also. But most of the time, it did really poorly. And if the previous one did poorly, I don't want to be part of the next iteration. So once again,
because that's more the code is kind of like the business model behind it, right? And so if the business model doesn't work, then that code doesn't work.
Not necessarily,
What would
because
be the business model? That would be
Would it be like the asset class? I'm trying to liken it to real estate.
Yeah,
So it's like, hey, if this is just like storage, it's the exact same
I would say
thing.
the code is the actual asset class. Yeah, because that is that's the foundation, the building blocks of the crypto, right?
Okay.
That is the foundation.
And then the white paper is more the business plan.
There you go.
Yeah, that's
there
good.
You go.
That's
I
good.
like that.
Yeah.
I like that.
And then the fifth part of the equation that I'm looking for, like Corey said, is utility. So I want the token to actually do more than just people get excited for it to appreciate. You see that in forms of like staking, for instance, or mining tokens. Those are some really good utility that give people a reason more than to just dump it and sell it when it goes up.
Why does it
reason to
create?
hold it.
It doesn't create. Well, there's not like a purpose to that utility. It's just like there's a less likelihood of people dumping it because it's now committed.
But that is utility.
By staking it.
But that is utility. So a bet on blockchain, and this is where you lose. This is where most people get lost.
Okay.
And if you're listening to the
Talk
show,
to me like a third grader, dude, because I am. And I might be a second grader.
Sure. If you're listening to the show, don't get lost, because most people say like, well, what utility is it? It's just funny money. Well, sure, that's great. What is like the dollar? It's all just something that we buy into and we trade for goods and services. Crypto is no different. It's just internet funny money. And so a bet on crypto is a bet on blockchain tech, period. If you think that things are going more digital, which I can share my opinion, things are absolutely going more digital.
Yes.
Pretty much all
Whether we
currency
like it or
is
not.
already digital. How much do you actually transact in cash? Most people, very little. It's your credit card or PayPal or Venmo or whatever. So we're already pretty much all digital. The cool thing about crypto is it just puts the power in your hands to choose a currency that you understand and how you want to interact with people as far as money and currency is concerned, rather than interacting necessarily in the dollar where the Fed goes and prints it, gives it to their buddies, they do whatever they're going to do, and you have no control over that. That's the difference, and that's the real utility in crypto's engine.
So why? But there's how many cryptos are there? How many coins?
There's
Tens of
there's
thousands.
about
Tens of
20,000
thousands?
right now.
20,000?
There's about 20,000.
All right. So the dollar, everybody believes in the dollar, right?
course.
If everybody's spread out over 20,000 different coins, which one? Is that what you guys are saying? Are you saying that there's going to be one coin that pretty much everybody
Not at all.
transaction?
Not at all.
Then why?
There will be handfuls of different currencies. They will have different utilities, different use cases, different communities behind them. To find the ones that are going to
Meaning
be
some are going to be for Are you all right? So I'm trying to wrap my head around.
So think about it. You have the
it's gonna be
dollar, you have the yen.
like a credit card for the airlines, or a credit card for Disney, or a credit card for something else, or
Kind of, or maybe,
Amazon.
Maybe
and
one
so
stock
people are going
that
to
pays you
utilize
dividends
that.
in a company. Like for example, one crypto that we're about to get into, it's called Famous. To get too deep in it, it's a decentralized exchange, and by me buying their crypto and holding their crypto, I own a piece of this decentralized exchange and make fees off all the trading that happens inside that decentralized exchange. It's like I own part of the business, and it's paying me dividends. That's an amazing use case for a crypto. Absolutely amazing. Another amazing use case is every crypto has to be inflated at some point, no matter what. Why not create a CD on the blockchain that you have to partake in by showing proof of weight to earn that inflation, so you can get the inflation of that crypto instead of destroying the environment and mining it like Bitcoin is. And that's what Hex is. I just described Hex, and the other one prior to that was Famous. And so you got to look for these utilities that have good use case, that have good product market fit, that are not backed up by Ponzi's or pump and dumps or rug pulls where the creator with admin keys can go in there and turn the crypto off and pull the liquidity out from under you. I've had it happen to me before. I learned the hard way until I found communities that really preach and hammer down the foundation and fundamentals and principles of crypto, the first principles of crypto.
Well, I think one of the things that sat with me the best is like you're looking for the founders who are very public, right? And so their reputation is on the line. If you don't know who the founder
skin
is,
in the game. Same as real estate,
exactly.
right? Do you have any skin in the game?
Yeah, because dude, they'll be found. If they do a rug pull and they go, people will be searching for them in other countries.
You'll be afraid of your life forever.
Right? That's the next thing they're going to find them.
Right.
So I do like, and I think that makes a lot of sense.
And back really quick,
betting on the jockey instead of the horse.
And to your question with utility, so like Corey said, we really like projects of things that are already done in the real world, like a certificate of deposit or stock dividends with interests in companies. If you're just adding a crypto application, the upside is infinitely higher. So you already have a use case utility, if you will, that happens in the real world, but we're participating in currencies that the Fed doesn't control. Rather, it's just code, and you can understand it and participate if you want to.
Mm-hmm. I like the idea of, don't get me wrong, I have a bunch of money that I've put into different coins. I've pretty much consolidated that to 3 of them. Hex is one of them, actually.
Nice.
Along with Bitcoin and Ethereum. And I got, I don't know, a couple $100 and a couple other altcoins, but that's it. But they're pretty much into those 3 coins is where all my holdings are right now. I like the idea of not necessarily buying into coins, but instead, what if I create my own coin and I back it? My utility is essentially a liquidity option for people to then invest in my syndications, in my real estate syndications.
You can do it with NFTs.
I create the NFTs that way.
Yeah, and so then people go and buy this, and then something that's typically illiquid, like commercial real estate, if somebody needs their money back,
it becomes liquid.
It becomes liquid. They can cash out of it. I don't have to then go sell the asset or find a way.
Utility,
So like something
that's
like that, I think
horizon.
is very
and it's already being done.
The smart contracts in the title space, right? The smart contracts in the transactional side of things, like that to me makes a lot of sense. And so, how do you find the coins that are doing things like that and trying to get, market buy-in on a lot of those kinds of things? Like, I think that's really like where I would be more interested, or in creating my own.
Sure. I think that in the question for all of this is like, where do you find the information? Because frankly, like, it's hard, right? So you need to go and figure out where to find the information. A Google search generally doesn't do it. In our experience, the best way is to find yourself in the right communities that are doing crypto the right way. Once again, we're looking for, so back to the 5 tenets of crypto. If you find those 5 things in a crypto project, you very well may have found a unicorn, because very few projects have all 5.
All 5, okay.
So if you find a project like that, then you go join the community, whether it be on Twitter or Telegram or Discord or wherever. You go join the community, you start involving yourself, and just by doing that, you'll be in the right place. It's the same as real estate, being in the right masterminds. Will you find your way to the right deals? Because you're in the right place with the right people.
Yeah.
So if you want those types of things where you're talking about, then come and join the right communities. We have our own group and our own community where we talk about things like that. I literally had a developer approach me about a month ago where same type of thing. He has this big syndication deal, and he's like, Dane, how do we turn this into an NFT to make it more liquid? We're working on things like that already, so you can come check out our community. But finding projects that are already doing the right things, naturally the right projects will come and be part of those communities as well, and they'll be talking about it.
And I think it's similar to if you're looking to get started in real estate, you go and find those communities,
Absolutely.
see who's talking about doing the BRRRR method, see who's talking about doing novations and wholesaling,
Right.
who's talking about buying rentals or buying apartments, and you just get inundated and then you start doing transactions, you start
And
doing
had I
deals.
done that in the beginning of my journey, if I'd integrated myself in the right communities and I would have done my own due diligence, my own research, and made up my own decisions, as opposed to listening to YouTube influencers, I wouldn't have got wrecked in the beginning of my crypto journey.
All right, so
it's just how it goes.
But here's what I've learned in my own journey, in looking at all the different opportunities that are out there, and being an educator in the real estate space. Dude, there's a lot of people who come out to my coaching platform or one of my a 3-day boot camp or something, and they're like, dude, I love what you're doing. Everything makes total sense. I don't want to do it. Who can I just put money with you? Right?
Yeah.
Is that option available in the crypto space? And if so, how would you look at those opportunities?
That's a great question.
Find and review those.
How many real estate deals that go that way? And I'm not talking you, I'm just talking general. You seem like you do excellent deals from everything that I've seen about you and know about you.
Yeah.
But how many other people do you know go and stick money with a deal to go do real estate, the deal goes bad and they lose all their money?
Yeah, I mean, you
it
hear about it all
happens
the time.
somewhat regularly, right? Well, crypto's no different. In fact, crypto was created to remove the middleman, to remove the third party.
Counterparty risk.
So you don't have those types of risks. And so
Is there a way to be passive in it though?
Yes,
Yes.
there is a ton of ways. Now, this is the fun part.
That's the fun part.
Yeah, let's talk about the fun part. This is where it gets really cool.
Okay.
So rather than giving your money to a third party and getting a return, well, there's a lot of crypto projects like Hex, for instance, where you can go and it's just you and the contract. You go and you can purchase your tokens, and then to earn interest or yield passively, you can go and you can stake the tokens and earn a return. And literally, you make money every single minute of every single day for doing that. There's other projects that produce even better yield than
But
Hex.
like, all right, so I staked a bunch of Hex. I don't even know what it was. It was at like it was like a 25% return or something when I did it, like a year ago, or I don't even know when it was. But it was like if you stake a certain amount or at this time frame, you like. Here's what the annualized return is.
Yeah.
Now they're not giving you actual dollars though.
Right.
They're giving you more Hex, right, annually.
Correct.
So if I bought 100,000 Hex, they're giving me 124,000, or I have 124,000 Hex in my account after 12 months, right?
Sure.
So it's like, you can't live off of that cash flow though, right?
Well,
Not off of
Not
Not
Hex.
off of that one.
I mean, you can if you once you go and their stake is due, and people build staking ladders, and there are a lot of OG Hexicans that are living off their stake ladders. They build out a staking ladder that goes out, for the next 15 years, that come out every 3 or 4 months, maybe twice a year, and they're pulling out the interest from their Hex, selling the interest and restaking the principal out the 15 years, and there are a lot of people living off just that.
Yeah.
Right.
Now, there's a lot of projects that you can get into besides Hex that does, if you get on day one, ground floor, like Pulse Bitcoin. I love Pulse Bitcoin. I'm mining for Pulse Bitcoin right now. I am making about 3,000 Pulse Bitcoin every single month. I can pull that liquidity every single month and sell it off if I wanted to. Each one's trading for about $2 each, and I have access to the liquidity anytime I want. So I can sell it, I can keep it, I can trade for other tokens, whatever I want. So it's a very liquid. It's a mining project. It's actually a software mining project, so you don't have all the hardware required like you do in Bitcoin. I do it on my laptop very easily. Great passive income strategy. Same like what I was talking about earlier with Famous. Once you get the Famous tokens, you stake it in the protocol, you're part owner of that exchange. You're gonna be making all those fees that you can decide to do whatever you want with. You can sell it for real world money. You can put it in other protocols, or you can keep it for moon bags and see if those other projects do moon and you're getting paid in. That's what's great about it.
And that one's more liquid too, so you don't have to wait like
even
Hex
30 days.
for a long time to stake. I have another mining project that I literally can cash out every single day if I want. And in fact, I've used it to pay bills, and I pay my Tesla, and whatever I want to do. Literally, crypto pays for my lifestyle today.
Mine too. I think a good portfolio should have a mix of all of it. Some that's forced you to have diamond hands and have more of a long-term mindset, and then stuff that you can liquidate if you need to on the short term. And
Right.
You should have both in your portfolio. And a little diversification is very good for crypto.
Does that get eaten up by the transaction fees, though? Like moving money around. Like how much?
Great question.
Yeah, so for sure. I mean, and we're probably talking to a lot of people who just don't understand crypto. So a transaction fee is just a little fee that you pay to use the blockchain. It's the same as like using a title company. You've got to pay for their services, right? So you pay a small fee.
Like a wire transfer fee or with the bank or like things like that.
Exactly. So you pay a small fee, and of course, like depending upon the blockchain and the fee and all that stuff. But generally speaking, your fees are anywhere from right now like $10 or less.
Because we're in a bear market.
Yeah. So they can be infinitely higher during this last
regardless
bull
of
run.
how much money you move around.
Yep, regardless.
Correct. The
So
transactions
you probably
are
don't want to
insane.
move
It's just the
$10
transaction.
if you have a $10 fee.
Right.
You want to take that into account. So yeah, you want to have a specific plan and a purpose when you're moving crypto around. You're not just doing it for fun. So you can limit your fees.
So, all right, let's talk. All right, so if somebody wants to go, they got $100,000, they want to go buy in at the bottom of the crypto market right now. What's the exact step-by-step process you would advise them to do? Do they go and open up a Coinbase account, buy $100,000 of Bitcoin? Do they leave it on the exchange? Do they create a wallet? What do they do? And what is the simplest way for somebody to take 10 grand or 100 grand or $1 million, whatever they want to do, and get involved in a safe way?
Let me kick this one
right.
off.
And what are the most important boxes to check on that?
This is what irks my nerve the most now. With all the communities out there, and our community, I think, is some of the best community as far as this is concerned, is security.
And Corey will talk about security. This is something that Corey's really passionate about. Really briefly before he kicks off into
I
this.
can tell. Knuckles are getting white.
Because it's so important.
Getting involved in crypto safely in the right way, there's more to it than just getting a Coinbase account and hoping that works out. Corey will talk about that more. If you want all those steps, then like Corey and I create a ton of free content where we show all of that.
And we'll go in depth more.
Yeah, you can follow us on social media for all that cool stuff if you want, and then that's the purpose of our group, is to do all the hand holding so you can get started in crypto the right way. And literally on the very first call, once our guys join, most of them start generating passive income that day. It's remarkable. Yep. But Corey, go ahead and talk about security.
To your point, I mean, security is the number one thing that if someone's want to get into crypto today and they don't know anything about it, the first thing they need to do is make it their mission to learn about security. Learn how to move the third-party the counterparty risk, which is like Coinbase. People who had their money in FTX got absolutely slaughtered, right? They got handed to the meat grinder there. That was horrible. You know, you hear some bad stories. I heard Tom Brady lost $100 million. I don't even know if that's true or not. But security is crucial.
Yeah. So the saying is, not your wallet, not your money, right?
Not your coins, not right.
Not your keys, not your
coins. And so, if you're going to use a centralized exchange, you only use it for the purpose of getting money, onboard it into the crypto space, and then you're going to move it and put what's called on decentralized, DeFi, decentralized finance. You're removing it from out of the third party, and you're holding the keys to your crypto.
Yeah,
that is the number one rule.
Where do you guys keep it on a hard drive, or do you guys
hardware
use
wallets?
Hardware wallets.
And we like different wallets. I like Trezors. He likes Ledgers.
Right.
And they both work great. They have great securities.
What about like I have MetaMask?
That's a software wallet. It has a lot of exposure.
Yeah,
it has additional exposure.
Absolutely, it does.
Yeah, there's more risk there because if I'm a hacker and I want to come and I want to steal your crypto and I'm any good at what I do, I can try to hack your computer. And if I can get into your MetaMask account, I can actually find your keys. They're stored in MetaMask. With a hardware wallet, your keys are
nowhere on the internet.
And when we say keys, for those of you that are listening that we've totally lost here, your keys are essentially just like your master password, if you will, to access your crypto.
It's like 25 random words that you cannot keep in an Excel file. You cannot keep in a Word doc.
You don't put anywhere digitally.
You write it down. You keep it in a safe somewhere.
I have it on titanium plates.
Yeah, there's a lot of people who do that.
I punch mine into washers, right? But essentially, the hardware wallet, your keys or your master password here is never exposed anywhere digitally, and that's the purpose of a hardware wallet. So if you don't have a hardware wallet and you've got a substantial amount of crypto, you should get one today.
Even if you don't have a substantial amount, because a little amount right now, in the middle of this bloody bear market, will turn or could turn to substantial amount in the bull market in 2025.
Right.
You know, and so
and really quick before we move away from exchanges, so let's say that like you go on a trip to Mexico and you need to go to the money exchange to turn your dollars into pesos, right? Well, you don't leave your money at the money exchange and let somebody else
That's
hold
a good
on
analogy.
to it. You take it with you so you can control it. Now, maybe they offered you a little bit of return. They're like, leave your money here and we'll give you more when you come back. Well, there's third-party counter risk there, and I want to ask myself, well, why are they offering me a return to keep my money? I don't want any of that. So I take the money with me. A crypto exchange is the same. You don't leave it behind. You make the swap and you take it with you.
And then so every time you want, I don't even know how this works, but every time you want to move your money, you essentially have to take that hard drive, plug it into your computer, and then move it that way. Is that what happens? I don't know.
So it's actually a lot easier than that. So it's kind of like using Venmo. Like if I know your address, well, I just punch it in and I can send it. Crypto's the same. If I have my exchange account and then my hardware wallet address, well, I just punch in my address here at the exchange and I send it to my hardware wallet address. It's pretty easy.
But
So
to
that's
your
generally
point,
how
yeah,
it
if I'm
works.
accessing the blockchain,
So it doesn't have to be
every
like
time-
plugged into a computer and actually.
Every
When I think
time
of hardware, I
access
think
the
of.
blockchain, I am plugging my hardware device in, and I am reconnecting it to my MetaMask. MetaMask is the dumb pipe how I view the blockchain that's connected to my hardware device, and I'm doing that every single time, right? And I want the extra confirmation that when I'm interacting with the smart contracts on the blockchain, it's going to confirm with me on my Trezor. It's going to tell me what the smart contract is. Do I want to engage with that smart contract? And it's all this extra security. I need that security.
Right.
And I even have a separate crypto computer that I don't use for anything else. I don't use it for business. I don't use it for real estate. I don't use it for porn, obviously. Nothing. It's only used for one purpose, crypto. And that's it, to keep things real clean. So, I mean, if you were asking about someone wants to get it, take $10,000 to get into crypto. The first thing I would say is they need to learn about good security and learn what security is, because even on MetaMask, you think, okay, I'm safe. They don't see what my funds are. Wrong. Everyone can see on the blockchain how much you have in your wallet. Now, if they want to hack you, so the guys who have massive amounts of wealth in their wallets, those are the guys that hackers are going after.
Yeah.
They can view into your wallet. Now, they can't just go in there and take your funds. They have to hack you. But if you have all your money on a MetaMask,
They're coming for you.
they're coming for you. You're a target because you have all this massive wealth there. And then if your
Otherwise, if it's on a hard drive, then they have to time it exactly
that's
when
a lot
you're
more
on.
difficult.
They have to,
That'd be a lot
in
more
order for them to.
And let's simplify. So it's not a hard drive. It's literally a hardware wallet. Looks kind of like a USB drive.
It's like a flash drive, yeah.
Yeah, it looks like a little USB
Yeah,
stick.
yeah,
You plug it in. It's pretty simple. It really is.
I mean, is it a USB stick, or do you have to go out and buy one?
So it's separate. You have to buy one. And if you buy one, we're not buying from any third parties. We're going directly to the source. So once again, we
Never
don't
break the chain of custody.
Never.
So Amazon, no. Even though Amazon sells them, no.
No.
Go directly to the source, because there are hackers out there who are going to go and they're going to manipulate the hardware device. They're going to put it on Amazon, and then now you just
you
expose
put money
yourself.
in it and they steal it.
Yeah.
Yep.
So you make sure you never break.
So go to
the chain of custody.
ledger.com, Trezor.com for Trezor.
Trezor.io.
Trezor, Trezor, directly to the source to buy those.
And then make sure you never share your keys with anybody. I don't care if Dane starts messaging me tomorrow on Facebook, say, "Hey, bro, can you give me your keys? I need to." No, bro. Sorry.
I don't
Never,
care if God
ever
came out of heaven and asked for your seed words. You do not share those ever.
With anybody, period. It should be locked away in a safe. I have mine on titanium plates. I got them in a fireproof safe. The only one who knows about it is my wife. That way, if I pass away on one of these trips that I go on all the time, she knows how to access there, but she's my wife. That's about it. You know, you're your own custodian now. You're your own bank. You have bought in your freedom. You got self-sovereignty. This is what crypto's invented for. Treat it as such. There's no 1-800 help me in crypto. Like Bank of America, if you get credit card fraud, you can call Bank of America and they'll give you your money back because the credit card is protected. You don't have that advantage in crypto.
You're the bank.
If Bank of America collapsed, we might be able to get our money back from it's FDIC insured from the federal government. If an exchange collapses like FTX, you're not insured. That money's gone. It's gone forever. And so we need to be our own custodians and learn how to do such.
So that scares the shit out of a lot of people watching this, right?
As it should.
Because now it's in their own hands.
As it should.
Versus putting it with a bank and at least it's insured by the government. If I had 250 grand, why would I want $250,000? Yeah, hey, there's huge upside, but there's also huge downside risk.
As it should.
Right? And so I think that spooks the shit out of a lot of people.
As it should.
So if I don't do it right, I'm thinking that right now.
Yeah.
A lot of landmines in crypto.
Yeah.
A lot of landmines out there. It's the wild, wild west of finance.
Yeah.
Which is also why there's so much upside potential.
Yeah.
Period.
And I think
That's why there is. It
that's
won't
the
always
weight.
be this way. 10 years from now, when we look back, or maybe like when my daughter's an adult, she'll be making gains in crypto like the stock market does. I mean, it's going to be a different landscape.
Yeah.
But right now, we have first mover advantage. We have the opportunity to get in here, but we have to educate ourselves. It's our responsibility to be, to educate ourselves and do our own due diligence and get around the right people who do know. Get in the right communities. If I'm going to go out there and start buying apartments tomorrow, and what am I going to do? Am I just going to watch a bunch of YouTube channels, or I'm going to come to you and say, hey, bro, I need you to teach me.
Right.
I don't care if it costs me money, because I know that dollar I'm going to give you is going to have an infinite return. This is the same in crypto. You need to be around the right communities, right people, and educate yourself with the right communities. I mean, it's like anything else. I had to learn it the hard way, like I do every single time, I swear. I don't know why I got to learn the hard way every time. That's because I'm stubborn, I guess.
Sure.
I mean, it's like,
so, and to your point, maybe if somebody is like, if somebody's got 10 grand or 100, it doesn't matter. Whatever the figure is, like my recommendation would be to do it the right way, then take like a very small portion of that and just start getting your feet wet. Once again, like Corey said, find the right people that you know, like, and trust, you feel like can help you, but take a very small portion just to get your feet wet, start understanding so that you can mitigate your risk.
Yep.
It probably shouldn't be 250 grand out of the gates, and there's
let's say
a right way
millions.
to...
I mean, it's all relative to the person, right?
Yeah.
It's all
Yeah, that's
I always,
fair.
when people ask me, hey, you get it all the time. Hey, man, what should I put into this? Ah, man, I cannot answer that for you. I tell them, like, put in one or two things can happen in this project. One, it can go to the moon, but it's going to take time. So you got to put something in that you don't mind not thinking about, leaving it alone for maybe a couple years. And two, are you okay with that money going to zero? Ask yourself that. If you're okay with that money going to zero with the infinite upside potential, there's a fine balance there. I cannot answer that question. Only you can. And some people are more risk averse and more risk tolerant. I'm very risk tolerant because I feel like real estate's made me that way. Flipping a bunch of houses is very, very risk tolerant.
Right.
And so I can never answer that question for anybody. I really can't. That's a tough question. Well, where should I invest? Bro, I don't.
Yeah. So, all right. So we'll wrap with this. What would you guys say is where's the opportunity, or what are you doing with your investments over the next 24 to 36 months? Because that seems to be the horizon until the next real bull cycle comes.
Should we talk about Pulse X? That's probably a good place to focus.
Well, let's talk about the landscape a little bit.
Let's do that first.
The landscape, and we'll go into this project that we're looking at. The landscape right now, we have a macroeconomic, recession upon us. We have the.
Are you sure the Biden administration saying there's not?
Yeah. You believe whatever narrative you want.
We're in a recession.
So, you got this going on with the rates and all this, and then it's timing up almost perfect. It might be a little bit delayed, but almost perfect to the next Bitcoin halving, which is absolutely insane that these two things
And the elections.
and the elections of 2024 all lining up with the next projected bull run of 2025 for crypto. And it works like clockwork. It has ever since its inception. I think we see a super cycle among us. I see maybe a once in a lifetime opportunity in the crypto space for generational wealth. Now you have to be in the right projects, and you have to do the right due diligence and get into these. I'll let Dane kind of,
And to add to that, I think a lot of people are nervous because you hear about government regulation with crypto. I think
CBDCs.
I think a lot of people are like, oh, is that going to kill crypto? Make no mistake about it. The government is making money just like anybody else in crypto. They don't want it to go away. They just want a piece of the
That's
action.
why they're putting CBDCs in place and putting regulations in place so they can make more money off your crypto and add more regulation and allow institutional money come into space, which that means comes more like the stock market, right?
Literally trillions of legacy dollars waiting on the sidelines for regulation. Because with a little regulation, that money will come in.
That would be the last super cycle, and then we might see a more more like, what do you call, like a calm bear.
Yeah, not as much volatility.
Not much volatility. It will even out once you get the legacy wealth and legacy finance.
And that could happen this next one. That could happen
or
later.
the next
Who
one.
knows?
We don't know.
Yeah.
But we do know they're building CBDCs, which is a central bank digital currency that will be implemented into society probably late next year or even the year after, which is basically just a government's form of crypto, their own stable coin, if you will, so they can get their grubby little hands in there a little bit more.
Right.
And so, yeah, that's the landscape that we're looking at coming up.
Yeah.
And I think the economy is still going through its downturn. I don't think we're at anywhere near a bottom. And the same in crypto. I think crypto has another huge leg down.
Right.
And I'm excited for it, man. I couldn't be more excited in my life. But
Yeah.
I'll let you talk about the projects too. That's kind of
Yeah, so imagine being in 2010 and seeing how real estate performed before, and knowing that, what would you do? Well, everybody says the same thing. I would go back and I would buy as much of it as I could possibly get my hands on and be patient. And if you did that, you would have changed your life over these last 12 years. We have the exact same opportunity right now, in my opinion, in crypto, because we've seen 3 cycles of this already. The best time to buy is at the bottom of the market, and we are very near that if historical trends continue to play out. So my question to everybody is, well, what are you doing about it? Are you sitting on the sidelines and saying, oh, like real estate's not going to work, it's not going to come back? Or are you actually getting in the game? For me, I'm freaking getting in the game, and I legitimately feel like I'm never going to have to think about money again in the next few years, period. I don't think it's even close. I think it's a foregone conclusion. I just need to be a little bit patient. And so in regards to what I'm doing, I'm focusing on projects with those 5 tenants that we talked about earlier, the 2 projects that I'm most excited about. And once again, you've got to do, I know everybody says this, do your own due diligence. This is just my opinion. Nothing here is financial advice. Maybe things don't go like I anticipate, but the probabilities from the research that we've done make me feel extremely good about Pulse Chain and PulseX. Long story short, Pulse Chain is a copy of Ethereum. It's a full system state copy. That means all the projects and tokens that are there on the Ethereum network, they're going to be copied over and be called Pulse Chain. Now, it'll be faster and cheaper and all those types of things. Simply put, projects that have copied Ethereum have done extremely well, literally hundreds to thousands of X's in just a few short years. So I really like Pulse Chain. We could talk for days about that. That's the general idea of Pulse Chain. And then PulseX is a copy of Uniswap. Uniswap is just a decentralized exchange. So instead of Coinbase or FTX, where you have a third party that's in charge of the money, you don't have any of that third party counter risk. You're in charge of your own crypto, and you can just come and use the decentralized exchange to swap or whatever you want to do. And PulseX is really cool because it has kind of like a built-in buyer, if you will. So it's really important that people understand. They're like, well, crypto's a Ponzi. You need more people and more money to come in for it to appreciate. Well, real estate's the same. Stocks are the same. You have to have more demand with more money to push the pricing up. I don't care what asset class it is. The cool thing with PulseX is there's a small fee that's paid every time somebody goes in and uses the exchange and swaps their tokens, and a portion of that fee is used to then go buy the price up off the market, push the price up, and then burn the tokens. So they're gone forever. The token is deflationary. Now let me show you what that looks like in math terms. So literally, if the swap gets to comparable to what Uniswap does $1 billion of volume a day at the bottom of the market. Like, think how much volume there will be in the next few years, and I think that speaks to, like, is crypto dying? Is it going away, or is it here to stay? If there's $1 billion on one platform at the bottom of the market, I know where my bet is. So if PulseX can get to a point where it does $1 billion of volume every day, that's going to equate to about $600,000 to $700,000 of buy pressure every freaking day,
for
no matter.
PulseX holders.
Yep, for PulseX holders, no matter what the price is doing, no matter what anybody else thinks, that'll push the price up. That equals about, if I'm not mistaken, about $22 million of buy pressure a year, just from the mechanic of how the project is built. We talked about utility. There's a utility for that project. So those are the 2 that I'm most excited about. And once again, we talk about all the other projects and things we're doing in our group.
Pulse and PulseX isn't an actual coin yet, right? Like, you have to
They haven't
sacrifice
launched yet.
right now?
Well, Yeah.
Sacrifice is over.
Sacrifice
so
is
if you're
over.
listening to this, don't go sacrifice.
Don't go sacrificing.
Got it.
You need to get around people who know how to get into the protocol when it launches. It will launch. You know, there's a few steps you got to take to get into that. You know, you have to get into decentralized finance with your hardware wallet, and then you have to take your stable coins and bridge it over the bridge. So it's going to be a few steps. You know, do a lot of due diligence, but it's going to be just a massive upside potential. Imagine getting into Ethereum on day one.
Ugh.
That's what I think this is. And Ethereum came out in a bear market.
So is that still available with Pulse Chain?
Yeah, you'll be able
X.
to invest when the project is launched. And, you know, we're pretty confident. Not sure. Probably next year it's launching, though.
Yeah,
It's
early
coming.
next year.
He was talking about it a year ago.
Right.
It was supposed to launch in last fall,
Mid-May.
right?
Mid-May.
And then it got, or last summer,
Mm-hmm.
and then it got kicked back to the fall, and then it got kicked back to this
Yep.
spring, and then it got kicked, and it keeps on kicking back.
Well,
What's going on?
I'll give you a little insight with that. At first, they were forking the BSC code, which is Binance. I don't want to get too technical here for your audience, but Binance is another blockchain. We were going to fork that first because it is faster than Ethereum. It's cheaper than Ethereum, and
Fork is just a term in crypto for copy.
Here we go. Yeah, no, you get.
Now you're good.
And the dev team the developers found that there was a lot of bugs in the Binance code. So we were speculating a little bit here, but we're pretty sure Richard Hart, who is the creator of Hex and Pulse Chain, decided to wait for the Ethereum 2.0 merge to happen, or
The Ethereum update.
the Ethereum update, which happened, what, was like 2 months ago?
Yeah.
They went from proof of work to proof of staking. I don't want to get too deep into that. But we feel like that's what he was waiting for because of all the bugs on Binance. And then now Ethereum 2.0 came out. He's going to fork that with a few updates to the code. But they had just now recently announced that there was a bug in that they're trying to fix. One thing I know about Richard Hart is that he prides himself on 100% uptime. No, no admin keys, no 100% uptime, no counterparty risk. This is his whole stick all the time. He's going to want to keep that reputation when Pulse Chain launches, and he's going to want to make sure it is the code is flawless. And this is one reason why we've been waiting so long. I mean, Cardano took 3 years before it launched.
Why is that important for the users, for the code to not have bugs?
So because look, I mean,
from a security perspective,
some users might be familiar with Solana. Solana has been hacked multiple times and multiple millions of dollars removed out of the system.
Yeah.
And
people like you or us, if we had money in the Solana network, literally it could be hacked and taken. So Richard wants to make sure there's no bugs. So like you said, people are nervous and what to do and how does security work. Betting on projects where the founder is committed first to security is very, very important.
I cannot stress that enough.
And that's one of the reasons we really like Pulse Chain.
Here's another thing why I'm so adamant about security. If you go out and get hacked with tokens that I own, that hacker is not going to hold those tokens. What's he going to do? He's going to go dump on the community's head. So now you got hacked, you got harmed. I'm getting harmed too because he's dumping on my head.
Right.
So that's why I'm so adamant about.
It's not good for anybody, right?
It's not good for nobody. For hackers to get the.
And when Corey says dumping, he just means somebody's going to go sell them off, and that pushes the price down. It's bad for everybody.
Yeah.
Right.
Dude, there's a lot of moving parts, and so
a lot to unpack.
It's a lot to unpack. It's a lot to learn. I've been sitting down with people who know this space since 2017 also, and still just trying to wrap my head around it.
It's become my passion, man.
Yeah.
It really has. It's I absolutely
you convey that, man.
in
That's
love
cool.
with it.
Yeah.
So
and it's not like, it's funny, I think that real estate I think crypto and real estate have some really good comparisons where like, when you first start trying to understand real estate, it can feel like learning rocket science. There's so many niches and ways to do business, but once you pick your niche and you figure it out, it's not rocket science, and you can have a system of how to do things consistently to consistently generate income and revenue. Crypto's the same.
Same way.
You just need to dig in, figure out where you fit. You get in where you fit in. And once you understand, it's really not rocket science. It's relatively simple. You just need to have the understanding. And I know I've said this a few times before, but that's why Corey and I built the community that we have, so we can help people do the right things. Literally, if I could go back to 2017 and use the information we have, I mean, millions of dollars, easy. I would have millions of extra dollars in my bank account because I know what to do now, and I know how to capitalize on the bottom of the market. So if anybody ends up listening to this show and they want to like have a free strategy call or check out what we've got going on, feel free to reach out on social media. We do this all day. Love to talk, and if there's anything we can help with, we'll do that.
Awesome. Well, dude, I appreciate you guys coming into town.
Absolutely, man. Thank
appreciate
you.
the convo. Very enlightening, and I'm excited to watch the market over the next few years.
We
It'll be
are
fun.
too, man. It's going to be a blast.
All right, guys. Appreciate it.
Thanks, man.
So hopefully your head's not spinning and you got to absorb some of that information. You know, I've been studying crypto and this space for the past 5 years or so and sitting down with people, and I learned a little bit more each time. I think these guys did a great job of kind of taking those complex ideas and simplifying it and making it a little bit more palatable to absorb some of those ideas. So if you're not connected with them, give them a follow. They do a bunch of coaching and stuff in the crypto space. Typically they say buy when the blood's in the streets. So I'm continuously putting some money into crypto. I don't really know anything about what I'm doing compared to what these guys are doing, but I think it's a space where I don't want to miss the boat. So we're going to keep on trying to give you guys as much content around all different aspects of wealth building, including crypto and e-commerce and obviously real estate. And then you can make a decision for whatever is the best fit for you. So appreciate you being here. Please like the video if you would, subscribe to the channel, and give me your biggest takeaway in the comments below. Appreciate you, and see you on Spill the Beans.